Good evening. This is William O'Neill India's weekly market overview for week ending December 24th. I am Rushit Sejpal, equity analyst at William O'Neill India. So last week was tough for the investors as Nifty reversed from a high of around 17,600 and closed below 17,000. So FII continued its selling spree, but the good part was that the DIIs were supporting the market. This Monday, as the session progressed, I think this was the reaction of most of the market participants that please stop it. On an intraday basis, Nifty was down more than 500 points, while the broader market was down 4 to 5%. However, the good part was the last hour recovery. Nifty closed around 200 points off lows. On Monday, we shifted the market status to under pressure as Nifty breached its follow-through day low as well as the previous correction low of 16,782. So we have discussed that whenever the market is in uptrend and if it breaches the follow-through day low and also the previous correction low, then those are some negative signs. But the things change on Tuesday, Wednesday, and Thursday. Like it were better days for the market. There were some positive global market cues. The US GDP data came above estimates. Also, there was a comment from the US president that there won't be any further lockdown. Plus, USFDA approved 2 drugs for the COVID patients, right? But see, guys, what I feel while analyzing last 3, 4 days is, you are investigating a compromised crime scene. Yes, I'm saying this because volume was very low. I think it was lowest for the year 2021. So this action can be misleading, right? The good part is that most of the stocks were off Monday's low, but they were oscillating in a very narrow range. However, there were pockets of strength in IT, textile, and logistics stocks. They did well, right? You can see the IT index near an all-time high, Infosys at a new high. Also, the mid-cap IT stocks did really well. This was after the Accenture's growth outlook, which augurs well for the Indian IT service players. Also in textile sectors, the market share of the Indian textile players is increasing in the US, right? And also the macros like China plus one and government of India's PLI for textile as well as the initiatives for textile parks is helping the sector. So now, looking ahead, we maintain a cautious view on the overall market. The reason being the distribution day count is at 3 and Nifty is trading below its key moving averages. If you can see today also the green line, Nifty failed to reclaim its 21 DMA, right? So now we want to see some good price plus volume action before we become constructive on general market. Also a reclaim and sustain about 21 DMA will be a good signal. See guys, there is no need to be aggressive here. Allow quality ideas to form base, reclaim key moving average, and improve its relative strength. That's it for the weekly market overview. Have a great weekend.